You weren't supposed to hear this, but Bitcoin may have already crossed the line, not in a dramatic headline way, not in a crypto is dead way, in a quiet, surgical, institutional way. The kind of shift that happens when the real money leaves the room and the retail crowd is still staring at the chart, thinking it's just another dip. Because what if I told you the bear market doesn't begin when prices crash? It begins when demand disappears. And right now, Bitcoin is showing signs of something most people won't recognize until it's too late. And listen, if you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming. Because the next phase of this market isn't about price. It's about power. It's about positioning. And it's about a silent wealth transfer happening right in front of you. See, the average investor thinks markets move because of emotion. News, fear, hype, but that's the surface layer. Underneath, the system runs on liquidity. It runs on institutional flow, and it runs on psychological control. CryptoQuant just released something that feels less like a report and more like a classified warning. Their on-chain indicators, the ones whales watch, not TikTok traders, are now confirming a bear market regime. Not a correction, not a pullback, a structural shift. And the first clue? Bitcoin's peak. Back in early October, Bitcoin climbed near $126,000. Everything felt unstoppable. The bull narrative was everywhere. People were calling for 200K, 300K, even $500,000. But at that exact moment, CryptoQuant's bull score index hit 80. A strong bullish environment, yes, but also a dangerous one. Because peaks don't happen when people are scared. Peaks happen when confidence becomes a drug, when greed feels like logic, when the herd believes the system finally changed. And that's when the trap closes, because while retail was celebrating, something else was happening. Something quieter, institutional demand reversed. And this is where the story turns dark. Last year, US spot Bitcoin ETFs were buying hard. Roughly 46,000 BTC accumulated at the same point in the cycle. That was fuel. That was the engine. That was the elite saying, we want exposure. But in 2026, they didn't buy. They sold. Net sellers, offloading around 10,600 BTC. Let that sink in. That's not just a small shift. That's a demand gap of 56,000 BTC compared to last year. 56,000 Bitcoin missing, vanished, withdrawn. And when institutional demand pulls back like that, it doesn't announce itself. It doesn't ring a bell. It simply removes the support beam holding the entire market up. And then, retail starts wondering why the price feels heavy, why every bounce dies, why rallies get sold instantly. This is what a liquidity trap looks like, not chaos, control. Because whales don't crash markets for fun. They reposition. They distribute. They let the crowd buy what they're exiting, and the crowd always thinks they're early, but the market doesn't reward emotion. It rewards discipline. Now here's the next signal. The one most people ignore. Even after prices dropped, US investor participation stayed weak. CryptoQuant points to the Coinbase premium. That's the difference between Bitcoin's price on Coinbase versus other exchanges, a proxy for American spot demand. Historically, real bull markets have a positive Coinbase premium because when US buyers show up, they drive premium demand. That's conviction. That's dip buying with weight. But since mid-October, that premium has been negative, meaning US spot demand isn't coming back. Retail isn't rushing in. Institutions aren't stepping up. It's quiet. And quiet markets are dangerous because they don't fall with screams. They fall with silence. This is the psychological battlefield. Fear doesn't arrive immediately. First comes confusion, then denial, then hope, then exhaustion. That's how retail gets mentally trapped, because the market doesn't destroy you with a crash. It destroys you with a slow bleed until you stop paying attention, until you give up right at the bottom. And while that happens, the whales accumulate again. That's the cycle. That's the elite money game. Now, the liquidity story gets worse. CryptoQuant highlighted something that should make your stomach tighten. Stablecoin liquidity is contracting. For the first time since October 2023, USDT's 60-day market cap growth has turned negative, a contraction of $133 million. That may not sound massive, but it's the direction that matters. Stablecoins are the blood supply of crypto. When stablecoins expand, liquidity enters. When stablecoins contract, liquidity leaves. And crypto doesn't pump without liquidity. Bull markets aren't magic. They're money flowing in. When that flow reverses, the air gets thinner. Stablecoin expansion peaked at $15.9 billion in late October 2025. And now, it's reversing, just like it does in bear markets. This is what resets look like. Not a collapse, a withdrawal, a draining, and the average investor doesn't even notice until the chart looks unrecognizable. CryptoQuant also revealed something even more brutal. 1-year apparent spot demand growth collapsed 93% from 1.1 million BTC down to just 77,000 BTC. That's not a slowdown, that's demand evaporation. New capital is no longer entering at scale. The crowd isn't expanding. The fuel isn't arriving. And without fuel, the machine turns against itself. Now comes the technical trigger. The line in the sand. Bitcoin broke below its 365-day moving average for the first time since March 2022. That's not just a chart level, that's a psychological regime shift, because long-term moving averages act like gravity. Above it, bull markets breathe. Below it, bear markets hunt. Bitcoin has already declined 23% in the 83 days since that breakdown. Sharper than the early stages of the 2022 bear market. And here's the twist. Most people think bear markets begin when price is low. No, they begin when support is lost, and no one is there to catch it. That's what's happening. On-chain support levels are breaking. Liquidity is tightening. Institutions are selling. Demand is fading. The media will tell you it's normal. They'll call it healthy. They'll say, this is just volatility. But volatility is the cover story. The real story is positioning, because elite money doesn't panic. Elite money plans. They exit into strength. They accumulate into weakness. And they use retail psychology as the mechanism. Fear controls money decisions. Greed blinds intelligence. Media manipulates emotion. Retail gets trapped in narratives. Whales exploit the herd. That's the system. And if CryptoQuant is right, Bitcoin could still face downside towards $70,000, even $60,000, unless a new catalyst restores demand and liquidity. And that possibility feels illegal to know, because imagine what happens if this is true. Imagine the crowd still waiting for the next moonshot, while the elite quietly reposition for the next repricing cycle. Silent wealth transfers don't happen with sirens. They happen with charts that look boring, until they suddenly aren't. So here's the elite lesson. The real battlefield isn't Bitcoin. It's your mind, your fear, your impulse, your need to feel certainty in an uncertain system. Because disciplined investors don't follow hype. They follow flow. They follow liquidity. They follow accumulation. They understand resets aren't the end. They're the beginning of the next cycle, but only for those who survive psychologically. So the question is, are you watching price or are you watching power? Because one tells you what happened and the other tells you what's coming. And when the next move begins, most people will be too emotionally exhausted to act. That's the game. That's the trap. That's the truth they never teach. And if this opened your eyes even a little, comment below. Do you think Bitcoin is entering a true bear market? Or is this the biggest whale trap of the decade? Send this to someone who needs to hear it. Hit subscribe and turn on notifications, because what happens next in this market, most people won't understand until it's already over. And remember, the reset doesn't destroy wealth, it redistributes it.